You're listening to AI Prism from Seoul Economic Daily.
Korea's financial regulator just called banks into a room and told them to stop marketing dollar deposits so aggressively. Meanwhile, a circuit breaker and 8% rebound in the Kospi happened in the same 48 hours. Here's what's driving both and why they're connected. It's Wednesday, June 10th. Let's break down what's happening in Korea's financial sector. The $1 exchange rate hit 1,512 won per dollar on Tuesday, after the Ministry of Economy and Finance made a verbal intervention warning against speculative trading. Korea's National Pension Service began selling dollar-forward contracts once the rate exceeded 1,561. The underlying problem is corporate dollar hoarding. Corporate dollar deposit balances at the five major banks, KB Kookmin, Shinhan, Hana, Woori, and NongHyup, totaled $53.39 billion as of June 4th, up $3.46 billion in just days. Corporations are holding export proceeds in dollars rather than converting them, betting on continued won weakness. Here's what the numbers show. The Financial Services Commission and Financial Supervisory Service held separate meetings with banks on Monday and Tuesday. The FSS asked banks to reduce aggressive dollar deposit marketing campaigns and strengthen consumer disclosures about foreign exchange loss risks. The FSC confirmed it is reviewing the actual scale of corporate dollar deposit growth. The FSS and Bank of Korea plan a joint inspection targeting speculative FX trades and market manipulation, with penalties to follow based on findings. On the foreign bond front, the government is accelerating its foreign exchange stabilization bond issuance. The Ministry of Economy and Finance issued $3 billion in February, the largest single issuance since 2009, and is now considering bringing forward the remaining $2 billion tranche from September to August, as rising U.S. interest rates make waiting costlier. NongHyup Bank separately declared a 2030 target to deploy agentic AI across all banking operations, committing 135 billion won, approximately $95 million to a new AI data center and completing the acquisition of AI software firm Agile Soda this month. So what does this mean for those tracking Korean financial system stability? The simultaneous Kospi circuit breaker and won pressure are not coincidental. They are linked through the same foreign investor selling flow. Foreign investors have net sold for 22 consecutive sessions, pushing capital out of both equities and the currency. The government's toolkit, verbal intervention, NPS forward selling, accelerated bond issuance, is being deployed in sequence. The joint FSS BOK inspection is the most credible near-term signal. If speculative FX positions are identified and penalized, that would be the most direct mechanism for reducing won pressure without a rate move. What to watch? The BOK Monetary Policy Committee meeting schedule. Any hint of rate divergence from the Fed amplifies the FX dynamic. The government's decision on whether to bring forward the August foreign exchange stabilization bond issuance. The FSS BOK joint inspection timeline and whether it produces public enforcement actions. #Kospi. That's today's AI Prism, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.